All right, welcome back to The Explainer. Today, we're diving into what is absolutely the most ambitious capital spectacle in modern financial history. SpaceX, a company that has spent over 2 decades, fiercely private, is finally opening its doors to the public markets. And, they aren't just dipping a toe in, they're doing it with an offering that's literally rewriting the rules of global finance. So let's just get right to the elephant in the room and ask the trillion-dollar question that has Wall Street completely divided right now. How exactly do you justify the largest initial public offering in human history for a company that is, well, still reporting multi-billion-dollar losses? Are we looking at the ultimate leap of faith into humanity's multiplanetary future? Or is this just a massive financial mirage? To really grasp the scale of what we're talking about, just look at this number. $1.75 trillion. Yeah, that is the staggering valuation placed on SpaceX ahead of its June 2026 NASDAQ debut. If they pull this off, this valuation won't just instantly place SpaceX among the top 10 most valuable U.S.-listed firms. It's actually going to make its founder, Elon Musk, the world's very first trillionaire. I mean, just to put this epic, truly cinematic scale into perspective, this fundraising event completely dwarfs anything the markets have ever seen before. Up until now, the record holder was Saudi Aramco, raising about $29.4 billion back in 2019. Now, compare that to SpaceX. They're looking to raise a base of $75 billion, and that could stretch to over $86 billion if underwriters exercise their full options. We're talking almost 3 times larger than the previous world record. It's wild.
Okay, moving to Section 1. Starlink's cash, Starship's burn.
So, to understand how they get to this massive valuation, we've got to look under the hood at the financial engine actually powering SpaceX today. Because it's really a tale of 2 very different financial realities. Look at the stark contrast between revenue and operating income across their segments for 2025. Over on the left, you see Starlink, the connectivity segment, generating a massive $11.4 billion in revenue. That's a huge success, right? But then look at the right side. Starlink is highly profitable, sure, but that profit is being used to heavily subsidize the massive operating losses of the space launch and AI segments, which are just burning through billions. And that leads us to a bottom line that's kind of tough to swallow. A $4.9 billion net loss for the full year of 2025. Because despite the undeniable success of that internet constellation, SpaceX's heavy capital expenditures, building Starship launch towers and these gigawatt-scale ground computing clusters, it all resulted in a massive cash burn.
Investor Financial basically hit the nail on the head with this quote. The crucial point here is that investors buying into this IPO aren't just buying a safe, highly profitable telecom company. They are funding a massive, extremely high-risk capital allocation story. The profits of today are being aggressively gambled on the technology of tomorrow.
Which brings us perfectly to Section 2, the AI physical stack. This pivot to tomorrow is really the secret sauce behind that trillion-dollar price tag. We're talking about the total integration of artificial intelligence following their merger with xAI. Elon Musk has forcibly grabbed the market's attention and shifted it away from just software algorithms, pointing it toward a staggering physical stack of what they are calling heavy industrial computing. We're not just talking about code living in the cloud anymore. We're talking about physical, heavy infrastructure. Massive energy storage batteries, rocket launch towers, nuclear power generation units, and gigawatt-scale data centers. And if you're wondering how they plan to actually make money off this AI pivot, check this out. In a massive pre-IPO move, generative AI unicorn Anthropic agreed to pay SpaceX $1.25 billion every single month just to lease processing power at their Colossus 2 compute center. That is a $45 billion contract. It secures these massive, virtually risk-free cash flows from an absolute industry giant, and honestly directly answers the critics who claimed xAI was just a capital black hole. Now let's map out how this builds a completely closed-loop semiconductor and compute ecosystem. Step 1 is Terafab, which is a joint venture with Tesla and Intel to actually manufacture their own specialized chips. Step 2 brings us to those Colossus terrestrial data centers down here on Earth. And then Step 3 is the ultimate goal, deploying that AI compute network directly into orbit. It's brilliant because they're systematically shielding themselves from all those global supply chain constraints. And that sci-fi vision takes us right into Section 3, orbital data centers. Look, terrestrial power grids down here on Earth are pretty much maxed out, and water for cooling these massive servers is highly constrained. But SpaceX's solution? Just move the data centers into orbit. It bypasses earthly grid limitations entirely. Think about it for a second. An AI satellite up in space faces the sun directly, without our atmosphere getting in the way. That means it achieves solar power generation efficiency more than 5 times that of terrestrial panels. Plus, the freezing vacuum of space gives them completely free cooling for those massive processors. But to make this orbital grid an actual reality, the math gets, frankly, pretty intense. Just look at this projection from Morningstar. To deploy enough computing payload up into space, SpaceX is going to need to achieve a flawless, rapid reusability cadence for their Starship rocket. We are talking about an unprecedented schedule of almost 1 Starship launch every single day by 2035. Now, if they can pull off that kind of launch cadence, the end goal is nothing short of awe-inspiring. Their vision is placing tens of thousands of AI satellites into orbit. And to be clear, these are not just internet routers. They are flying supercomputers equipped with massive solar arrays and liquid radiators. They would form a completely decentralized, interplanetary grid that routes AI tasks directly to your devices via laser. It would literally bypass Earth's terrestrial internet altogether. Okay, time for a deep breath. Section 4, Wall Street's reality check. So it sounds like the literal future of humanity, right? Well, Wall Street is dumping a giant bucket of cold water on the hype. Analysts from firms like Morningstar are warning that this stock is entirely priced for perfection. They're arguing that the $1.75 trillion valuation essentially assumes every single high-risk project, from those daily Starship launches we just talked about to the totally unproven orbital data centers, has to be executed absolutely flawlessly. Look at the gap here. Morningstar's cash flow projections put SpaceX's fair value at just $63 a share. That's a massive 53% discount to the company's $135 IPO asking price. They're basically saying that only if you bake in their absolute best-case Moonshot scenario does the math even come close to what SpaceX is asking investors to pay today. For that $1.75 trillion valuation to actually make sense, SpaceX has to deliver sustained, borderline impossible operating profit expansion. Just look at this chart. It shows the astronomical implied growth in earnings needed over the next decade just to justify the IPO pricing multiple. If they hit a single major regulatory setback, a delay in Starship development, or if space-based AI just proves way too costly, that valuation could absolutely plummet. And institutional investors are getting incredibly wary when they look at the peer comparisons. SpaceX is entering the market trading at around 94 times its trailing revenue. To put that crazy multiplier into perspective, a tech giant like Meta generates $200 billion in actual revenue, but it trades at a lower total market cap than what SpaceX is asking for, on 1/10 the sales. Add to that a whole laundry list of massive, tangible risks. For starters, Elon Musk is going to retain 85.1% of the voting control through a dual-class share structure. That means public shareholders will have basically zero say in corporate governance. On top of that, out of that record-breaking IPO cash raise, at least $20 billion has to be used immediately to repay a high-interest bridge loan tied to the XAI merger. And the clock is ticking. They have to repay it within 6 months. Which brings us to our final section. Section 5. The verdict. So we've seen the awe-inspiring vision of this multiplanetary sci-fi future. And we've also dissected the brutal, high-stakes financial reality waiting for them on Wall Street. As SpaceX hits the public markets, it really represents a profound crossroads. Is this the ultimate leap of faith that's going to finally build the infrastructure for our future? Or is it a dangerously overhyped bubble waiting to burst under the weight of its own gravity? Ultimately, investors are going to have to decide. Thank you so much for joining this explainer, and we'll catch you next time.